Hello everyone, welcome to the Trendline Investor channel. In this video, we're going to look at two stocks, one from the logistics space and one from the auto ancillary space. Both these stocks are looking excellent from a weekly charts perspective, and we look at how I found the stock. We look at both the stocks, fundamental plus technical analysis. So before we head into the video, don't forget to like this video and don't forget to subscribe to my channel. So let's take a look at the first stock and how I found the stock. Okay, so every week, every weekend, I do run the scanner, and it's a pretty standard thing that I do. And I run the scanner and I try to find which stocks are looking actually good for this week or for the coming months. Okay, so in this scanner for this week, I found two stocks. One is Aegis Logistics. So I'm just doing a search, and if you see, you can see Aegis Logistics popping out there. And the other one is Wheels India. Okay, so both stocks are from the scanner. The scanner is pretty simple. I'll just show you what it looks like. So if you go to edit, it is straightforward. Market cap is greater than 500 crores I have. Then it has sectors, and sorry, the filter here, if you see, it's simple weekly CCI crossed above number 500, and here are the columns. I'm using our market cap, sector, and the industry. Okay, so it's a pretty very simple, straightforward scanner, and you can find a lot of stocks here. And then if you sort by market cap, you can actually see which stocks are actually showing up in your scanner. If you want small caps, you focus on small caps. If you want mid caps, then you look at only this segment. And if you want large caps, then you're here. Okay, a very straightforward scanner. I'm sure you'll like it. If you do like, let me know in the comments as well. And if you want me to improve the scanner, also let me know. But for me, this works day in, day out, every weekend as a full-time, I have a full-time job, so it works totally for me. So let's take a look at the first stock, Aegis Logistics. And for me, Aegis Logistics is a pretty good company from what I've studied in the last few hours that I've been looking at the stock. And what does this company actually do? So this company actually imports and distributes LPG gas, and also it's India's leading oil, gas, and chemical logistics company. So if you look at this screen over here, you'll find a lot of information here. The company has a 15.5% market share in the market share in the LPG imports, and also has plans to take it to 25%. So you can find all this information in this section over here. I've just taken it from here. And the company was also recently announced a joint venture with Wopac, which is a world's largest leading tank storage company, which will help this company increase its market share in the storage space as well. So they also have some amazing clients. If you just go down, so all this data that I've spoke about is here. So if you go down, you'll also see that the company has clients such as Shell, Reliance, HPCL, BPCL, ONGC, HUL, and many more. Okay, so that's from what the company does. Now let's take a look at the financials of this company. Okay, so Aegis Logistics actually has a market cap of 9,000 crores, and hence it belongs to the mid cap space. Now, if you look at the ROC, it is 18.4, and ROCE is 17.4%. And the company actually has been able to make good profits. The price is trading at a PE of 25.4 and is actually not overvalued, in my opinion. Now, looking at the PE trend, since listing, right? So I'm just going to take a look at this. And since listing, the company's share price, the company's, the PE ratio is trading at an all-time low, historical low, in fact. But the EPS has hit an all-time high of 10.9. So when you compare both the EPS, hitting an all-time high, and the PE is actually at all-time low, that's actually, very good signs from a value investor perspective, or even from a momentum perspective. You can find this kind of such companies. If the EPS is hitting all-time high, you also expect the PE to hit all-time high, but the PE is not heading to all-time, which means the earnings is going up, but the price has been stagnant, or the price has been kind of going sideways down, or has been going downside. Okay, so for me, this stock is definitely undervalued, and definitely makes sense to buy the stock at this point and to make some good returns going forward. So let's take a look at the quarterly results as always. So the quarter results for me, they're okay. It actually hit an all-time, it hit a low of 678 crores in 2021, but the operating margins have seen a steady increase. So if you look at the last few quarters, it actually hit a high of 22%, and then it's kind of going down, right? And if you take a look at the PAT has been looking pretty good. It has hit almost an all-time high, and for me, those numbers are good from a quarterly perspective. The annual sales, if you look at this trend, it hit an all-time high in 2020 here, but then dropped in the last 1 year, and it's rising again in 2022. But then take a look at the operating margins, right? So that's what is really fascinating for me. The operating margins have been pretty strong here, and it has improved from 4% all the way up to 12%. And as a result of which, even the PAT has hit an all-time high, right? So that's 358 crores, which indicates that there's something definitely changing from an operating margin profile. So that's also why I'm discussing the company today. Looking at the balance sheets, the reserves have been actually pretty good. The reserves have gone up significantly, and the borrowings also have risen. But for me, that's not really a concern until the borrowings are, around the levels of 1,000 crores. Is totally fine, because remember, the reserves are good. The PAT also has been pretty good. So that's the end of the fundamental analysis. So if you're loving my analysis till now, don't forget to hit the subscribe button and let me know your comments of what you think about this company. So coming to the next part, which is my favorite part, which is technical analysis for Aegis Logistics. As always, I'm going to start from the monthly charts. And if you take a look at the monthly charts here, we've actually been in a very, very long-term uptrend. And since the stock listed in 1999, we have seen a very strong move. So it was listed here. We had a strong breakout. I'm just going to mark this like this. So we had a strong breakout, and we headed from almost 1 rupee to almost 18 rupees. And today's stock is trading at 258 rupees. So if you have invested in this breakout, and if you held for the last 15 years, probably would have made some amazing money in this stock specifically, right? But again, the stock went into consolidation mode, from 2005. Just connect those points. You see there has been a consolidation mode, and I'm just going to extend this line here. And you see the stock had a breakout here, in fact, around these levels in 2015, it had a breakout. Then it went all the way high, it came down, retested. Again, it went high, it came retested. So for me, the stock is in a very strong consolidation mode. Now I'm going to teach you how to draw this trend line from here. So I'm going to connect this lowest point over here, and I'm just going to connect that point over there, and if you see, we've actually around that zone there, right? So, and now what I'm going to do is I'm going to correct this trend line and just keep it here. So if you connect this point over here, this point, and that point over there, for me, that's a beautiful long-term trend line, which the stock is again reversing from, right? So if you just zoom in, you'll see stock reversed once here, which is the confluence of trend lines. So when I say confluence, there are two trend lines here. One is this trend line, and one is this trend line, right? So that's a confluence, and for me, that's a beautiful looking chart. And if you just take a look at the CCI on the monthly charts, we are around 43. It's on the positive territory, and also relative strength is heading higher, and it's crossing that monthly average. Now, if you take a look at the weekly charts, here is what you see, a much, much better perspective. CCI has crossed 100. CCI today is around 227.94, because of which it came in our scanner, and also relative strength for the first time in many weeks. In fact, if you just zoom in this one, you will see since that July 2021, it's been 1 year, and CCI is again crossing the 52-week moving average. So for me, all these are very strong signs for the stock to head higher. And now I'm just taking a look at what is happening here, right? So if you look at what's happening here, I can also draw this. So the stock is breaking out from a very, very strong, base. So if you look at this base over here, you don't have to draw all these lines. Just keep it straightforward. Just connect these two lines, and you see this strong breakout, strong volumes. We also had this strong move in the week of February 28. Again, a strong move there as well. So for me, all this indicates that this stock is primed to head higher from here, right? So if you are investing, then the stop loss for me would be 190 on a weekly closing basis. So that would be somewhere around here. So 190 on a weekly closing basis. Keep that as a stop loss if you're an investor and if you're looking for much higher returns, right? And for me, the targets that I'll be looking forward to is around the upper end of the channel. In this case, not the upper end of the channel, at least the middle level of the channel. So I'll be looking somewhere close to the levels of 800 in the next 3 to 5 years, which is that middle channel over there. Right, so that's from an investing perspective. So with a stop loss of 190, buy current market price, and looking for targets of 800 in the next 3 to 5 years. So that's almost more than twice the returns from the current market, more than 3 times the returns from the current market price. And if you're a momentum trader, then what should you be doing? You should be buying the stock. I'm just going to go to the daily charts here. And since the daily charts, we already had a strong move, I'm going to switch to the hourly charts, right? So don't go into hourly charts unless you are a good trader. So what I do is keep a stop loss of 235, which is the hourly candle low of the 22nd of July. Keep a stop loss of 235 and buy above the levels of 264. So buy about 264 for the stop of 235 for targets of 380 Now, where is the 380 coming from? The 380 is coming from this recent high, right? So I'm looking for targets of around 380 because it has been a one-way move down. So I'm expecting also one-way move up. There is not much resistance around the zone here. So probably looking for 280 levels. 380 is what my targets would be, right? And if you want to take the best advantage really, then ride the long-term trends. And that's the first stock that I want to discuss today. So I'm sure you're excited looking at the stock. Everything is looking good. Now the second stock that I want to discuss today, as I mentioned at the beginning of the video, is Wheels India. Okay, so let's take a look at Wheels India as well. And Wheels India is basically an auto ancillary company. It is from a small cap space, unlike Aegis, which is the mid cap space. And here, if you see, it's around 1,700 crore market cap, 12 ROC, ROA 12.5, PE 22. So again, for me, it's okay. It's not overvalued or really undervalued. For me, it's fairly valued. Looking at these numbers, I'm not doing valuations here. I'm just teaching you how to check the stocks and how it is. So it is involved in road wheels, parts and accessories for machinery equipment used by construction and mining industry. So it's not only in auto; it's also contributing to the machinery and other industries. So again, look here, right? So the PE is trading at 33, which is all-time low, but whereas the EPS is hitting an all-time high. So EPS is 33 levels, whereas the PE is around 20. And if you look at the past, the PE also has been around 40 levels, and here it has been around 80 levels. So that's 100% overvalued for me. But for now, this looks like the stock is definitely looking very good from an investor perspective. Now, reason I mentioned auto ancillary is because it did Skinner said so. But do let me know what you think is the sector for this stock. But from my perspective, it's an auto ancillary space. Now, take a look at the quarterly sales as always. The company has posted a very good sales of 1,100 crores, and last 2 quarters have been phenomenal for this company, whereas the stock price has not done much yet. We look at the technicals shortly, but the operating margins have been very stable. So from that perspective, nothing to be worried about. Almost all-time high profits. And if you look at the yearly trends, look at that number which has come in 2022. That number is just phenomenal, right? So crazy numbers from a 2,200 crore sales to 3,600 crore sales. Now that's because of COVID, but even if you take the recent 2019, we did 3,100 crore sales, and now we're back to 3,600 crores. That shows this company definitely is doing well, excellent in the recent years, and the PAT has at an all-time high of 80 crores. Now, what else does one want, right? So you have everything ticking for you in this company from a fundamental perspective. The only problem for me in this company is the borrowings. So borrowings have definitely gone up. Now, if the industry is going to do well in the next few years, definitely leverage is going to help the company, post more profits, more margins, and also reserves have been pretty good. So for me, reserves also increasing while borrowing is also increasing. So borrowing is not very concerning for me, but do keep a tab on that borrowing. It is highly likely that the company might do well going forward, but the borrowings need to be kept in control, and they need to make some decent profits. Probably 80 crores is not enough, probably much higher profits and sales. But if they are using the borrowings, as I mentioned, for good, and if the industry itself is having a good growth, then I don't see a problem there yet. Okay, but do let me know your views on that aspect. For me, also, the concerning part is the company promoters have reduced the stake from 75 to 57%. Right now, that's not good. But whereas this has been absorbed by the DIs, the DIs have increased the stake, and if you look in the last financial year or the last quarter, Nippon has increased, IDFC has increased, mutual funds, HDFC mutual fund has increased. So all of them have grabbed that, and probably something is going on in the company. The mutual fund guys are betting on this, and let's see what's in store for us. But for me, the promoters reducing is again another concern, but not a very bad thing to be really concerned about. Okay, so that's the fundamental analysis. Again, as usual, do let me know how I am doing in terms of stock analysis, and let's take a look at the technicals. So technicals, as always, I'm going to start, from the monthly charts. Let's remove all of this. Let's do a fresh analysis. So if you look at the company was listed in 1999, and then it had a very, very strong consolidation, almost for 12 years. It's a 12 long year consolidation, and then we had a very, very strong breakout. Now, again, as I always say, horizontal breakout strategies are one of the best strategies for a beginner to trade. Now, this was a perfect horizontal breakout in 2012, and we went all the way from 100 to highs of 1,000. So that was a 10x after the horizontal breakout. Now, that's what I call a perfect timing of fundamental analysis or techno-funda based entry in stocks. Now, look at the volumes there. That spike, right? We had excellent volumes there, and then we had this move up, and now it dipped all the way from 1,000 levels. It all dipped all the way to 280. Again, we're back to 700 levels. Now, take another look at this trend line or this channel that I'm going to draw. I'm going to connect this point over here, and I'm going to connect that point over there, and I'm just going to drag that. Right now, if you take a look at this, so this is not a perfect channel in my opinion, but you can keep that line over there, but I would not call this a perfect channel. For me, what's really interesting in this channel here is that lower trend line. So I'm just going to zoom in and show you, right? So we had this move here, right? So we had this trend over here, a very strong uptrend, which we broke. Right now, remember, trend line breaks do lead to long-term corrections, sideways corrections, time corrections, and here we went head into a strong correction, and then we retested this, and then we again retested this here, and again we retested, and we're moving up again. For me, that is now a very important trend line for me. Right now, that's what I call a primary trend line, and I don't expect this stock to break the trend line anytime in the next few years. Now, if you're investing in this company, what you should do is go to the weekly charts, find the weekly swing low, which is 510. So from investing perspective, buy at 733 levels, keep a stop loss of 510 on a weekly closing basis, and then you go to and see what is the recent high. That should be a first target. So my first target is around levels of 1350 or 1400, but for me the ultimate target from investment perspective is around 2600 levels. So that high in that channel, the middle of the channel. Now it can head to the upper end of channel, but that's just being too optimistic. Channels can sometimes give you dreams. Don't fall into those dreams. For me, the middle channel is the target for me, 2600. Invest at 730 with a stop at 510 for targets of 2600. So that's from an investing perspective. So if you're a short-term trader, then go to the daily charts, and we already missed the bus here, in my opinion. So for me, that was the time to enter the stock. We had a short consolidation, we had a breakout there, and again we have a short consolidation. So if you're really a short-term trader, then your stop loss should be around 660 levels. So keep this hourly stop loss at 660, which is also short consolidation on daily chart. So 660 should be a stop loss, buy at current market price, and we're looking for targets of at least minimum 760, 780 levels. So 800 levels you can say first targets, and then targets of 1000 levels. So that's from a short-term perspective. So keep a stop loss of 660. 733 you're buying at current market price, so that's around 90 point stop. We're looking for targets of 800 and also targets of 1000 levels. So 800 would not be a great risk reward, so I'm looking for targets of 1000 in this stock. Okay, so these are two stocks I wanted to discuss today. I hope you enjoyed my analysis, and if you are new to my channel, don't forget to hit the subscribe button. Until then, I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye.